Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, March 2nd. It is 7:12 in the morning as I'm starting the video. And don't forget, run the video at 1.5x. I think you'll enjoy that speed. Got a lot to go over, so let's dive into it. Futures, equities are up about 0.7. Oil up 6%. Gold's down a tick, about 0.5%. Copper's up 1.4%. Silver's down 1.3%. Bitcoin is flat. Got some big macro things today. We've got car sales, ADP. Jay Powell will be on Capitol Hill this morning. Probably, I don't have the exact time, but I'd guess 10 a.m. Also, he's going to be on Capitol Hill tomorrow as well, addressing both chambers of Congress on Fed policy, just a semi-annual update. Could be news breaking. The Fed finds themselves in a really, really tough spot. As you know, energy prices are spiking, inflation spiking. Way behind the curve as far as rate hikes go. He may be able to clarify where he thinks the Fed is heading, so that's going to be closely watched. We've got an oil inventory at 10:30, and then we've also got over in Europe a virtual meeting of OPEC Plus, and so what may come out of that is, of course, Saudi Arabia stepping up as best as it can, or is willing to, or is able to add barrels to the very tight oil market as sanctions begin to bite into Russia even more harshly. I'll have more on energy in a minute. Earnings before the bell. The only one I saw pre-market of real interest is Dollar Tree, but after the market closes, we've got Snowflake, ChargePoint, Okta, American Eagle Outfitters, Vive, Victoria's Secret, and Splunk. Now, I want to talk about energy for a little bit. I think, first, let's start with the chart that you're looking at right now. This is the carbon ETF. It is an ETF that tracks the price of carbon credits that companies need to buy in order to be ESG compliant. This is mostly something that's happening or has been going on in Europe for a long time. I don't know the degree to which U.S. companies need to buy these credits. So, for instance, and you can see it's been a one-way street higher going back to the inception of this ETF. So, the way it works is if you are a coal-burning power plant, which is a dirty fuel, you're going to have to buy more carbon credits to become ESG compliant. Whereas a nuclear plant, for instance, may have to buy some, but not very many. So there's a whole wide range of companies. Each one is assessed an ESG impact value and told by the government how many carbon credits you need to buy in order to be compliant. And then there's companies on the other side of the equation that are super green, so that, say, a solar farm or a windmill farm may have positive carbon credits that it can sell into the market. So some companies are generating credits and other companies need to buy them. And you can see that it peaked out in early February, and yesterday the bottom fell out. And what happened was that the biggest business lobbying group in Italy formally went to the Italian parliament and said, hey, we've got to suspend these carbon credits while these energy prices and turbulence are going on in the market. Now, to my knowledge, no decision was made, but just the threat blew a hole in the ESG credit market. And what is happening, I have a little write-up in the blog this morning, and I hope you go there to look at it. But there's a quote that I saw from on the internet. Wokeness is a peacetime luxury. And I think it accurately encapsulates what's going on. Like, you can have all the great aspirations in the world that you want when things are going smoothly, but when price starts to dig into your lifestyle and starts impacting the businesses that we run, it's a slap in the face. It's a reality check. It's a gut punch to the global climate change crisis that has been dominating the discussion and policy over the last couple of years. And I think what's going to happen, at least short to medium term, is one of, instead of let's burn clean fuel to let's burn anything we can get our hands on type mentality. And I've already shared, I believe in the past, that Japan just quadrupled its energy subsidy to its citizens. United Kingdom is already sending out energy stimulus checks. France is already doing that. I believe Germany is too. And of course, if you're getting reimbursed for a portion of your energy costs, it doesn't dig into the demand, because you're just saying, okay, well, I just got a bump in my energy credit, so I can keep buying gas and it doesn't impact me. So I think oil is going higher. I think commodities are going higher. And a chart that I want to show you that some of us are involved in, but even if you've never traded BTU, Peabody Energy, it's a coal company, we're at a really critical spot. Here on the weekly chart, you can see that I had put a measured move in here from this inverse head and shoulder structure, projecting out. Well, I got basically 400%. It's well on its way to closing that measured move target, and a break above 1950 on the weekly chart opens up 27, and I think it's going there. I'm looking at the pre-market tape right now, and it's trading at 1990. So at least pre-market, coal is driving higher. And on the website, on the blog post this morning, I give you a bunch of other names in the coal space. And, this idea extends into uranium. People are figuring out, number one, we can't rely on wind and sun for baseload power. It's a nice add-on. It's a trend that will probably persist, but for the here and now, people got to get their hands on fossil fuels. Nat gas is going higher, oil's going higher, and there's the real probability that the only thing that is going to knock down these prices is a recession, and that's going to hit the demand side of the equation and knock down energy, because in the short term, and we've been talking about it for a while, there's no way out. And that was before the Russia thing. That was before the Russia thing. And so I think these are going higher. I'm long BTU. Like I said, even if you've never traded coal before or ever looked at the space, I think there's more to go. You could easily say, oh, wow, look, I missed the move. I would tell you to set those thoughts aside and trade the chart. Once you get a breakout above 1950 or 20, you've got a beautiful line to shoot against. And as long as it holds the breakout, it's going higher. And then if you get stopped out, you get stopped out and you reset. But until then, I want to stay long. Now, just some local knowledge on BTU. It is a volatile name. So you can get a 5-8% dip intraday, but what's been happening lately is that those dips have been bought. So if you're nimble and you're at your desk and you see one of these 5 or 8% pullbacks and it hasn't violated any technical levels, buy it. And I think you'll be rewarded. It tends to reward the dip buyers more than the breakout buyers. But at this juncture, I think you got to get involved on this break above and then set your stop below. Or if it were to break out to 20 and then pull back to 1950, I think you can buy it there. So enough on coal, but I think I've made my point clear. All this stuff is going higher, and be on watch for companies starting to say in their earnings report that energy prices are really digging in. So let's get into our indexes. SPY daily, you can see that we got rejected yesterday right at the 200, and we're still below the downtrend line. And what I want to say, and I want to be real clear, I believe every chart that I'm going to show you this morning is bearish. I do not want to get involved on the long side. Now, and we're talking about swing trading. We're talking about, multi-week type positions. Until we have good technical evidence of prices wanting to move higher, I think these up days are going to be faded. And I think the right move is to have a bearish tilt until we get some kind of evidence to say, okay, the correction is over and now we can get long. But until then, there are very few pockets of bullish activity in the markets right now. I mean, defense, strong. Cybersecurity, strong. Commodities, anything. Aluminum, corn, wheat, soy, lean hogs. It doesn't matter what it is. Steel. Those things are doing well. But when you get into the tech space and some of these other names and sectors, they're just not doing well. So for today, I think you can use 432.50 as a pivot point for active trading that you can be long above and try to gain whatever little bounce there's going to be up into this 436 area. But you've got a big downtrend line. Now you've got resistance here. We had the little flag we got, this was looking really bullish before yesterday, saying, okay, is this a flag structure? And you break out and go. Did not happen. It got rejected. And so now you can tactically trade this stuff long, but when you get up here into this 436 area and this downtrend line, be really, really careful. And if you get the breakout, okay, you can get long with the stop below. But until then, for longer term traders, swing traders, not, daily active, trading volatility type trading, scalping, I think leaning to the bearish side is the right move. What I've done on all the charts, I'm not going to call each one of them out, but this is the Fibonacci retracement off of the low. And, very common to get, a 50% pullback on a fast move like that. And so I think what you should be doing is integrating the fibs into your analysis and looking for these pullbacks if you're an active trader. So for instance, we could go up this morning and then come back down to 425, something like that, at between the 50 and 38% retracement levels. But you start losing 425, I think it'll start rolling downhill quickly at that point, and then coming back down here towards a low test from the other day. So SPY is definitely in a bearish posture. You can see the micro levels here on the 30-minute chart. We dropped down and tested this 428 level yesterday. It held. We got a big, a decent bounce into the close. So I'd be focusing on, if you're an active trader, 432.5 and 428. That in and of itself is a $3 move. So, or even a $4 move. So if you're active and nimble, you can make a lot of hay if you get these whipsaws right during the day. But if you're swing trading, I'd either be stepping aside or looking to fade rallies. QQQ, same thing. Got up to the moment of truth at 345. Had a reach up towards 348 yesterday. Where was the high? Yeah, 339. We had two candles on successive days that got rejected. Not a coincidence. That's right where the 20 EMA is heading down. You'll know that on the way up, moving averages can act as support. On the way down, they're resistance. So right now, price is below the downtrend line and below the 20. I see no reason to get all bulled up on technology at this point. And just keep in mind, still well below the 200. And now the 50 is going to cross the 200 in the next day or so. And then we'll have that classic full bear stack on EMAs where the 200 is the highest and then the 50 below the 200, etc., all the way down to the 8-day. So I don't think it's time to try and be a hero getting long the Qs. Here we've got a 2-hour chart, fake move above, back down below. You lose yesterday's low at, what was it? Yeah, 339. And then I think that'll open the door towards 337.50 and most likely 335. We had a reaction low back here. Not a lot of support. We had a reaction low here on the wick. So I think a break of yesterday's low would open up the door towards 335. And you can see here on the 30-minute chart, we drop down below that flag structure, and you've got these intermediate support levels on the way down. IWM, same thing. You can see here at 202.50, it was rejected here, here, here. We had a little attempt at a break above towards 206 on multiple days. That was rejected. And now we've had 2 days of runs at 202.50 or 203 that were rejected. I think today you can use the 200 as your pivot point, but like I say, IWM has been the bearish of them all. The bear stack is fully intact with all the moving averages lined up bearishly. And aside from tactical trades, there's no way I'm getting long IWM for any length of time. Probably any longs are going to be measured in hours, not days, if there's some kind of a kickback rally. And if you got something into this trend line, I would definitely believe that it would be an objective place to try a short. And I think we're going to end up coming down towards 187.50 before, we break out above 210 back into this year-long trading range. I just don't see that. You can see the fake breakout yesterday on the 2-hour chart, but then right back below the 2-hour trend, I've got the fibs lined out here. You can see the 38% lines up really well with the lows yesterday at 198. And I think if you break below that level, 196 comes in really fast. And then that will be a really, really big test on IWM. Very common in a new uptrend to get that initial burst, then pull back to the halfback. You'll see some people trying to get long there because it's a common technical move, up and then half back and then try to bounce it again. But if you get bounces into this 2-hour trend line, I think that they're going to be faded, and that would be my trade. Here it is on the 30-minute chart. You can just see the micro levels in a little bit more detail. At this point, if you're new to the channel, thank you so much for spending part of your morning with me. I try real hard to set the team up with objective levels and commentary around the trading to set you up for a positive day. Whether you're a swing trader or an active trader, I try to give you objective trades that you can make money on and get you on the right side of the chart. Of course, it'll be up to you to hone your execution and to honor your stops. I can't do that for you. But if I can take the technicals off of your table in terms of prep, I think you're going to have a lot of success. If you feel the same way, please subscribe, hit the alarm bell for post notification content, leave me a comment, leave me a request. I'd be happy to do that. And of course, long-time listeners, thank you so much for the support. Please pass the link along. And if you're not a member of our group, please go over to the show notes. You'll find a link to the blog site where a simple drop in of your email address will get you on the team. You'll get all my content right to your email box, morning, noon, or night. And you'll also get an invite to our trading room. We've had several new members join us over the last couple days. It's great to see that. Got a really good group of people. And I think you would not only enjoy the camaraderie of other aspiring traders, but also get a lot of trade ideas that never make it to the blog site, never make it to the videos, but are still really good ideas. So Facebook, what I've done here is drop in an intermediate level between the high of the range and the low of the range from 195 to 215. If you're an active trader and you want to try to game moves to the bottom of the range, back up to the top of the range, knock yourself out. You can see here we've dropped below the midpoint. So if we've got a down day, your level to alarm for a more substantial move lower for swing traders is down at this 195 level. If we break that, we'll quickly go down to test this 190 prior low, but then I think it goes lower from there. Apple clinging to this 163, which was the top of the prior gap. It's since been filled, but you can tell there's a lot of muscle memory there. I think the trade, it's okay to be long against 163, hoping for a move back up to 165.50. But if this thing starts rolling downhill, I think you're going to come back down to the bottom of the prior gap down at 159. You may see a little bounce here at the midpoint at 161. But other than that, I think if this thing cracks, the trade is to be short. Tesla, right, hanging tough. Had all things considered, a good day yesterday just for holding its ground while a lot of other things fell apart all around it. I would not mess with it while it's in this $20 trading range between $860 and $880. I think you take it long above $880 and hope for $905, but on a break below, I think you're going to come back down to $830 relatively quickly. That's a $30 move. That would, I think that would work in terms of, a good risk reward. But then if 830 does not hold, then down to 800. So if you're interested in trading Tesla and you get a sense or an alarm that it's breaking down below 860, that would be a good entry. Because remember, the key is the 200 moving average at 861. And so now it's clinging above the 200-day moving average. Once it breaks below, it's on the wrong side of the chart, as it were. And I think you'll get more people trying to shoot against it once it breaks back below. Every technician in the world will tell you what I just told you, that once it loses the 200, that's a very important technical level, and the trade is to be short or just step aside if shorting is not your thing. Microsoft, we had multiple candles try and touch this 300 pivot point, could not get through it, rejected, came back down here to test 293. I think that's your pivot point. You see that the fib retracement levels are much lower. I think 90 is a really 290 is a really key level on Microsoft. Why? Support, all these resistance levels. And so now if it breaks 293 and comes down to 290, if this support does not hold here, then it rolls down fast, down towards 286, 282. And if things really get ugly, go back down to test the prior lows. As long as 293 holds, if you're an intraday trader and you see bulls step in, you can be long against 293, but keep it on a short leash. And one thing I have not done here, but I'll just show you visually, you could easily draw a downtrend line from this high, catching this peak and meeting up with this high. You'd have a nice downtrend line, series of lower highs, series of lower lows. That's a downtrend. You don't want to be continually, as a swing trader, trying to be long when you are in a 60-minute downtrend line and well below that level. Amazon, here I do have the line. You see lower highs and lower lows grappling with 30-30 right here. I think that's your pivot point. If it can't hold above, then it opens the door to these fib retracements on the downside. And for a longer term swing trader, I think you got to wait till you're above the 60-minute downtrend line before really considering a multi-week kind of long hold. I think a lot would have to happen in order to get me bullish. Google held up better than most, still is in this flag structure. I think you set an alarm at 26.55 and 27.05, and you take it in either direction, whichever way it goes. I think there's too much congestion inside the flag to try to do a whole lot on such an expensive stock. I mean, it can bounce $20 and really not mean a darn thing in the whole scope of things. So, but also downtrend on the 60-minute chart. Netflix continues to wrestle with 387.50. You can use that as your pivot for active traders. For my money, for more of a swing trade or multi-day trade, I think you got to get above 410. And just from a technical standpoint, that opens up the chart on low volume over price resistance. And I think you could get a pop to 460, and that would make it worthwhile on a swing trading basis. But keep in mind, it's still in a pronounced downtrend. But in this case, shooting for a $50 move, if things get bullish above 410, I think is a good trade. But below 387.50, that opens up the door to 370, 360, and lower. SMH, lower highs, lower lows. Bad day at the office yesterday, down 3%. I think your pivot point today is 302. That would open up the door for a move up to this downtrend line. But in general, I think strength should be faded on SMH unless and until this downtrend line can be taken out. Lower levels of support down at 256. If that doesn't hold, we go down and test these lows back at 248. Now, what I want to do real quick is just run through ARK, because we got the big bounce off the lows, and I think the bounce is coming to an end, and I just want to give you some levels. Shorting these is not everybody's cup of tea. I get that, but if you want to, if it is your cup of tea, I want to give you some alarms to set. ARKF 29.50. You get a break below that, I think you can go down to 28 pretty quickly. And I think these groups of names will show that weakness first rather than exhibit relative strength. So kickback rally to resistance. It's since faded. Set an alarm at 29.50. ARK Genomics, same pattern. Comes up, finds resistance, coming back down. I'd set an alarm at 47.50, and I think that would open the door for a move down to 45. ARKK, proxy for Tesla trading. 60-minute chart, downtrend line on the 60-minute, lower highs, lower lows, alarm 68, and also alarm Tesla. You get a decisive break on Tesla below 860, below the 200. It's just math. Tesla is the biggest holding in ARKK flagship fund. I think that'll start to roll over. I would be setting an alarm at 68 if you're interested in doing anything on the short side. On the long side, I would want to see, number one, this downtrend line taken out. Number two, I'd like to see 71 at this high taken out as well. That would show some strength. And if you wanted to play it to the long side, you could get long there on just a tactical trade. But if you go out to the daily chart, it's quite clear in a big, big downtrend on the daily. ARKW, same setup, lower highs, lower lows, meeting resistance here at the downtrend line. I don't have it in here, but I think an aggressive short would be to alarm 87 right here below this line of support. There is some intermediate support that's going to come in, but not till around 85. I don't think it would be substantial, but it is there. So I think if you wanted to, just as a tactical trade, get short at 87 and then see what happens at 85, I think that would be the trade. So let's recap it real quick. Jay Powell on the hill today. He's in a real bind. Could be market moving events if he lays out a plan to tackle inflation, given that interest rates don't have anything to do with oil prices. I think it's going to be really, really tough, but he's got to try. So depending on what he says, you may see the bond market and equity markets really move on that news. We've also got oil inventories, and we've got a big OPEC Plus meeting today where Saudi could announce or not what they're going to do on their ability to put more barrels on the market. Be careful of your long equity exposure. Very few sectors are performing to the long side. The ones that are defense related, cybersecurity related, commodity related, metals and miners, precious metals, all the grains. They're all bullish. Stay long, but be very careful on your equity exposure, especially swing traders. This is a swing trader environment. If you're not comfortable with 1%, 2% moves on a daily basis, you just got to step aside. But all things considered, all the charts are near-term bearish, and I would not be trying to step in and be a hero on the long side on broader market stocks unless you see something very, very specific and you set a tight stop. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Hope you have a good day. Hope you found the video helpful. And I will talk to you next time.